Good day everyone, my name is Benjamin and I'm a commodities analyst for Phillip Futures. In today's Market Watch, we will be exploring the theme of rise of populism in global politics and its impact on gold prices. So populism has seen a resurgence in the 21st century with a rising tide of nationalist leaders taking office as we move forward in 2018. The West has seen a shift in political trajectory as seen through Brexit, an Italian anti-establishment government, and the America First policy by the Trump administration. The rise of economic nationalist policies has threatened global economic growth and the foundation of free markets and the WTO. So how has the financial markets reacted in the face of populism in global politics? As we look at Brexit in 2016, the pound crashed while gold prices rocketed as news broke. Safe haven demand rose as markets were rattled and unnerved by the potential of weaker economic growth and a loss of value in the pound sterling. The precious metal stood tall as investors sought to preserve wealth while the financial storm raged in Europe. Over in Italy, the Five-Star Movement Party campaigned on anti-immigration, nationalistic policies and took power in the second quarter of 2018. Italy suffered from an institutional crisis as the president rejected a Eurosceptic pick for the nation's key economic ministry. Markets then braced for impact as safe haven demand scaled on the potential Italian pullout in the EU. Though markets have since recovered, safe haven demand came into attention once more amidst geopolitical uncertainties. The US has repositioned its foreign policy with America First as its guiding principle on international trade. The US has withdrawn from the TPP, pulled out of the Paris Climate Accord, slapped economic sanctions on Iran, threatened an exit on NAFTA agreement, and pledged punitive measures on trade partners and its closest allies on the basis of national security. We saw gold prices surging in response in the first quarter of 2018 as investors priced in on fears of a blowout in the global economy. As such, we expect for heightened volatility in 2018 as risk premiums increase in light of global economic conditions. The US economy, though largely trending upwards, has seen much volatility in US indices and also in the VIX index. The potential of weaker emerging market growth, along with a slower global economy, has sparked major sell-offs on various instances across asset classes as trade protectionist policies escalated into 2018. As we focus on the 10-year chart, gold has traditionally appreciated in times of crisis and geopolitical uncertainties. The precious metal has spiked in the global financial crisis 07-08, Eurozone crisis in 2011, Crimea crisis in 2014, Brexit in 2016, and of course the recent US-North Korea missile crisis in 2017. As we move forward in 2018, safe haven demand will build as investors grapple with trade protectionist sentiments looming large. The potential of weaker emerging market growth, slowed economic performance in global markets, and an unwinding of monetary policy will create fundamental support levels for gold prices. Though gold prices have weakened substantially into 2018, we remain fundamentally long on the precious metal for the longer term. Geopolitical uncertainties and inherent risks in the financial system will call for stronger safe haven demand at the end of Q3. However, we access for a short-term bear movement on the second key support level. In the longer run, we assess for the precious metal to trade broadly between the 23.6 mark and 38.2 mark in the Fibonacci retracement chart. So here comes the golden question. How can investors benefit from the precious metal? Phillip Futures now offers mini spot gold in Singapore dollars and US dollars. Now this allows retail investors to actively capitalize on present opportunities with a smaller investment sum. Should you wish to find out more, please visit phillipfutures.com.sg or contact our customer service hotline for more details. With this, we have come to the end of today's Market Watch. For more information on how to get started in investing commodities, indices, futures or forex, please feel free to approach any representative of Phillip Futures. Please subscribe to us on PhillipCapital YouTube and Facebook and stay tuned for more Market Watch videos. Thank you.